What's up, everybody? What's up, the swag? Yeah, yeah. Honestly, it was a really great week of trading. Yeah, we're gonna dip into some of those in just a little bit. We're gonna take a look at some of our new FTD data. Mm-hmm. Yeah, yeah. I mean, it's tough to know exactly what some of these deadlines, like exactly what FTDs or what stuff is driving some of this price action, but um, seems pretty likely, right? I mean, what I think is pretty cool here in this respect. I mean, we'll have to let me adjust the camera a little bit. What I think is going to be cool to see is somebody I think pointed this out over on Superstunk too. Like, I mean, if we just continue to get now sort of FTDs here, FTDs here, FTDs here, and sort of rolling cat errors, like this is where this stuff starts to get exciting. Right. So in the past, we've been like, okay, how do we predict? Like, what's the deadline? Okay, here, something like this. But if we get into this situation where it's just wave after wave after wave of FTDs, where it's not like, okay, we get a bunch of this stuff that all culminates 1 month, and then it gets kind of kicked down the road a couple months, and then a couple months, a couple times a year we have to worry. We get to be excited about all this stuff kind of coming together. But when it goes down from, say, quarters to months to weeks, and it's just rolling FTDs all the time in these really large numbers, that's where we can get really, really excited. So interested to see some of that continue to pop up. Okay. Yeah, what's up, Tobias? Tobias. What's up? Yeah. Close over 28. Close over 28 is cool. Let's get out a little chart. Let's get a little chart. We're going to do our share here. Always good, get a little chart action going her. Let me get that up. Can I reset the frame? Reset chart view. There we go. Look at that. Look at that. Zoom in a little bit. Yeah, this was cool. Hey, I was happy to see that close over 28, man. We held up this pocket pretty well. Interesting whatever drove some of this stuff. Like, you see, we got some of these the screen's pretty small here. I'll make this a little bigger. We got some of these really interesting volume pockets. So like this one was really cool. I don't know what drove this, but this kind of little Friday rocket here up from 2850 to above 29. Cool. And then we got these, right? These just pockets of several 100,000 shares. This is like 200,000 shares, 200,000 shares. This is like 150,000 shares up here. And then we got, of course, then throughout the day, this is all, charm, kind of cool off, which we figured, right? That was basically the call for the day. Was it doesn't look like we're going to have too much. Did look like we had some there, right, for some price action. Not too much. Kind of cool off, kind of quiet down. Did we actually end up with a red candle today based on our opening price? I mean, surprising if so. We did actually, huh? Yeah, not bad though. What was our open? 2861. That's why. Man, close though at 2845 is really good. Means all those 28s. I think part of what made those 28s, what made that a little bit more appetizing, we have to pop over there. Let me pop over to X real quick here. Where's my article for today? Here it is. Right, we can just go straight to unusual whales. So let's see. OI numbers here. So yeah, I mean 15,000 here. This is shared, right? You can see that. Yeah. Am I in the way? No, you should be able to see that. So yeah, we got 15,000 calls here, which closed in the money. I guess these were essentially worthless though. These were worthless. So all the ones at 28.5, all the ones at 29, all the ones at 29.5. What I think made a lot of that really palatable was 56,000, right? We started the week with like 34,000. So a lot of those calls were opened midweek. That's like 22 something thousand of those calls were open midweek. That's number one. And yeah, like 8,500 of them were open just yesterday. So a bunch of people went into that zero DTE there. So that was interesting to see. But yeah, I mean, cool. They didn't. What really sort of made me a little bit less bearish going into today. Bearish in the sense of like cautious. Oh, we're gonna go down. Was that cat error, I should say, data. So yeah, we'll pull that up in a sec. But that basically said like, okay, well, we're gonna get something next week, so they're not gonna go. They might not go nuts trying to adjust the price down if they know they've got cat error stuff to deal with next week. And that is coming up, starting on Tuesday too. So yeah, but a little cool off today, maybe a little cool off even Monday. Something like what we saw this week, right? Because we dipped Monday and then we actually did yesterday's price action. We did on Monday, right? So very interesting. What's up, John? Good to see you, sir. I know. Well, we are still in this macro bull trend, like I said. 28 closing in the money. Like we did see this, right? We did see some of this. November was a little bit more volatile. We did see some pretty good closes in November. But this is what we'd see, like kind of $1 to $1.50 over max pain, right? Which is OI based. It's not necessarily like it's a good approximation for what the dealer's maximum profit point is going to be. But not necessarily like it's because it's just based on open interest. It's not necessarily based on, holding orientation. Supposedly that's not supposed to matter, but the reason why it works really well is mostly the market maker is going to be short, right? Most of the time they're the short party, especially in a stock like GameStop. Most of the time it's very call skewed. Most of the time the market maker, the options market maker, is short. That may have shifted a little bit recently with the introduction maybe of some more advanced options traders coming in to deal with this volatility stuff. I mean, that's a bit of speculation, but one thing I noticed if we bump over to QuiverQuant was one of our biggest shifts here in holders of GME options is Wolverine Trading right here. Yeah, so they picked up. We'll go back. Wolverine Trading was holding on the 31st. Was holding 16. I think that's 16,000 calls, right? Yeah, 16,614 calls. I mean, that kind of seems low. But in 7,000 puts, that kind of seems low for being the options market maker. You're only holding that, but unless otherwise, it's usually held in one of their like subsidiary branches or something. But in any case, yeah. So, but definitely really cool to see that close there. What's up, Sam? 7th green week in a row. Yeah, is that right? I think that's right. I was looking at that earlier too here. I think so, right? So 1, 2, 3, 4, 5, 6, 7. Yeah, seventh weekly close. See, 7th weekly green close. Yeah, and it's like true green closes, not just like par there. Yeah, above these little moving averages. So that was great. That was great. Looking for this weekly PMO deal here. This is starting. We're moving into place here. Oh, are we gonna get a cross? Is the question. we move down? Why did we move down? We shouldn't have moved. Oh, no, that's 7.8. Yeah, getting pretty close. We might probably another 2 weeks to get the weekly cross. Probably another 2 weeks to get the weekly cross. Last time we had a weekly cross like that, yeah, it was May of last year. Late April, actually. So early May. Week of April 29. This candle right here. That's where we got that weekly cross. Oh, really cool if we do that. Really cool. That'll be big momentum. Yeah, I don't know. Maybe we just, right here, just kind of bleed on up here. 30 though, that's gonna be tricky. Maybe we do this 32 thing like we did back in November. Remember? So we got over here and then we kind of got up to 32 and we did a bunch of flirting with the kind of lower 30s. Here, right? Flirting with the lower 30s, flirt, and then didn't really move over pretty definitively into that new bracket until this little pocket right here and then back down. Yeah. So we'll see. Is that a detective show? I don't know what Columbo is. It sounds fun. What's up, May? Yeah, let's see. How's his actual stock chart? What are the values there? Because they're a little bit different. Let me get this one here. Got that doji. Get the quick refresh. Yeah. Yeah, on the Roaring Kitty PMO chart, we're back up here. So we're doing this thing kind of like what we were doing in November, right? Kind of cross on cross, kind of stand up here. So yeah, we definitely recross there, which is good. Still says, and I guess we just had the 0 line cross there on Roaring Kitty's PMO. We did just have it. If we go over to, oh yeah, we essentially have it here. As soon as our next candle prints on our daily chart over here, we'll be over the 0 line. So continuing to see that bullish momentum. This, interestingly, looking like some consolidation here. Interesting if we get kind of one more in this range on Monday and then we go up a little bit again, maybe finally get that 30 test. Very cool to see. Xian Quinn, what did our options look like in the money? Let's bump over here. So yeah, not crazy, right? Not crazy here. Probably around 42,000 calls, 4,000 puts. So yeah, I think that was pretty palatable market maker wise. That's less than a fifth. Is that right? Yeah, it's like a sixth. So still looking at 80 plus % of our call OI expiring out of the money. It's not like in the 90s like they typically like, but 80-ish % total OI, total call OI out of the money is not bad. Yeah, 16K with the 28s. What's up, Guido? Tom's here too. Dingus Pinks. The 49 pitch, right? Oh, it's funny, right? Seeing the 1 cent below, right? 1 cent below those strikes. Not 37, not 46, not 21, not 72, but 49, 99, right? That's always, we always get a little conspiracy there, yeah. All right, man. You getting a little some trade profits there? Nice to see. Nice to see. Very good. Is that right, Tom? Yeah, I remember. I was looking at that something. I was looking at that back back in the fall, right? So, bump out to our weekly here. Because I was looking to get these in a row, right? 1, 2, 3, 4, 5, 6. Looking for that 7th. I remember looking for that 7th. We didn't get it here, but then we got 2 more. Couldn't quite turn the corner here early January, and then of course OPEX week was cowabunga to the downside. Yeah. Yeah, so I mean 7 green weeks in a row is not nothing. Interesting to see that in place. Interesting to see just how, right, we see just how much these weeks here, right, we're getting these like tiny squashed candles, 5 in a row, something like this, right? Very interesting. Hey, we just keep seeing them. Don't know what a whole suite flip is. I have to look that up. Cheers, and NMA. What's up, my friend? Yeah, that's right, Tom. Yeah, that was the 2013 squeeze, right? That was also a console cycle. I very much suspect that was probably like how Roaring Kitty. I wouldn't be surprised if that's how he learned about the stock. Maybe he even traded it, but right, there is that one cryptic post from the GME sub. So in the original GME sub, right, which is the first one, right, prior to Super Stonk, in the GME Reddit sub, there was this like cryptic message from like a username who's like was kind of like White Cat. There were no posts in the GME sub, and it was just this message in Portuguese, inviting someone who, if they could figure out how to decode the message, to come play a game. And it was like a modified Van Gogh painting from 2015. Yeah, I mean, that, to have known about that all the way back then, I forget exactly the details of the 2012-2013 squeeze, but this was a console cycle. I think this was like Xbox One and PS5. Or PS4? Does that sound right? Xbox One, PS4. Was this Switch one? This may have been Switch one. Maybe that was later. No, that was 2017. That was way later. But in any case, yeah, this was a big deal, right? 2013. This was like the first of many GameStop squeezes. I mean, is this kind of maybe your OG here? What's in the box, right? Into 08, down, flat for years, and then tried to get maybe shorted super hard here, get this V pattern, right? We usually get this kind of V pattern. We got this in 20. Where do we get this? Down here. It's way smaller. Whoop. They tried to do it there. V shape followed by this kind of like pistol thing, and then cowabunga. V shape, pistol thing, V shape, pistol thing, cowabunga. Whoa. Yeah. Yeah, Switch was 2017. That was later. Okay. Okay. That sounds fun. Green eggs and ham. Remember that book? Dr. Seuss. Yeah. Okay. Xbox One, PS4. Yeah. Console cycle. Sure. Good stuff. Yeah. So let's take a look at some of this CAT data. Let's look at some of the FTDs here. So first off, I'll put this. Where's the link here? CAT data link right here. So first off, yeah, I wanted to just point this website out to you guys so you can take a look. It's hard to find. It's hard to find where to actually get these presentations. So yeah, I wanted to go ahead and just kind of point this out. So, oh wait, that's not what I want. This. So yeah, if you just look up like consolidated audit trail, like updates and stuff like that, it'll just show you like a bunch of change logs for or like the rules of how it works and things like that. If you also like the FINRA website doesn't have the updates. So you have to go to CAT. What's the website here? catnmsplan.com. catnmsplan.com, and they'll have it. And so they'll show you the monthly updates. Next one, yeah, so you can see this here. Next one we have coming up, I don't think we have one until, so it'll show you the calendar. Should be able to see it. Where is it? I think the 26th. Is the next one. June 26th. Let's go. Yeah, a little difficult to actually navigate this. I think 26th of June is the next one. But in any case, wanted to point this one out. Is this from 417? Oh, these are the 417 ones, I think. Yeah, these are the 417 ones. Let me get to the May one here. Here we go. Here it is. So we'll get it gives you the data right at the end. It'll tell you it by day here in the appendix. And here's equities errors. Where are the equities errors? Here they are. Yeah. So I talked about this a little bit earlier. I also posted this on my X page, right? A number of other users have been posting this. Yeah, right. So we've got 7 billion of them that are, I mean, from the T+35 deadline coming due next week. So when I saw this right after market close yesterday, I immediately thought, okay, well, maybe we kind of chill out a little bit here on Monday, because this will correspond to Monday, the 11th. No. This corresponded to today. Yeah, 10th was yesterday. This corresponded to today. Monday, maybe we do actually see some more bullishness then, because we've got 3.6 billion errors logged for the 14th. So T+35 off of that is Monday. And then we've got another set on the 15th, so that's going to be Tuesday, Wednesday, and then we kind of cool off. Yeah, Thursday we hang out a bit. Decent kind of cluster actually here also the following week, but especially when we see these errors in the billions, that's when there seems to be some pretty interesting correlations there with respect to GameStop price action. And then, of course, later on, we've got May 1st, 1.6 billion errors. And then we're not going to know, right? We don't know what comes after this. It does get a little bit smaller, a little bit on the 6th. But we do have some really considerable FTDs coming up as well. So we'll hop over and take a look at those. Interesting question from Spike here. Have I done a dedicated video on how I use unusual whales, chart exchange, and other tools that you use to trade GME? Hey, yeah. I mean, I haven't done a dedicated video, but yeah. I mean, I can break down some of that. I try to break down some of that. We can talk a little bit about that today. How I use these. Specific questions. We can get to that after we spend some time with these FTDs and stuff. Steph Hermans has something to do. I have any idea why there are always so many 62,800 share orders multiplied by 2 or 4? I don't actually. I don't. I wonder if that's just like a common like delta multiple, something like that, for like hedging contracts or something. Not sure. Question I can pose out there. Yeah. What's up, Ken? Yeah, get some Friday good cheer in here. Yeah, so then in terms of, I guess I can talk about like how I look at, we can start at like chart exchange and stuff, as pertains to this question, or how I look at FTDs. I mean, I suppose like, looking at FTD data here. So if we go over to XRT, so like, okay, first off, if we look at stuff like this, this usually, I mean, I guess not XRT specifically. This kind of tells me like, okay, are they doing musical chair stuff? Like what's going on? Are they creating shares? This was really interesting. I haven't seen this recently. So, we'll get this 715. This is something I've observed for a few weeks now, right? Basically, yeah, for the past couple months, basically since the bond arbitrage, the beginning of the bond trade, the issuing of the convertible bonds, between 715 and 730, it's really common to see XRT liquidity go way down. So it doesn't typically go down to zero. But interesting to see that 2 days in a row. That happened yesterday. It went down to zero. So on the 14th, it spiked up to 2.5 million and then went down to zero yesterday, and then came back up. And then today it did this again. It went down to zero, slightly refilled by 8, went to zero again. 8:30 slight refilled again. 8:45 back down to zero, and then only at 10:51 did we get any units of XRT put back on the shelf. So this says maybe a lot of redemption was actually going on throughout the day today, which is really interesting. So whenever we see that level of redemption, that usually says, oh, hey, we need to create more shares of GameStop. We don't have enough liquidity on GameStop in order to do our thing, which is weird because there are so many shares that look to be on the table here. So what exactly is being created? Like, what are they rocking back and forth here with XRT? What could be the case, and what's really interesting, Richard definitely noticed this, pointed this out, which is why his resource is so great. If we go over to fails here on ETFs. So we're looking at Richard's sheet now. Huge number of fails on ETFs from this last batch of data. So back in April, IWM, 4 million fails on the 16th, right? 4 million fails, 1.1 million fails. This is crazy. This is a crazy number. Look what's typical on IWM. I mean, we have seen this, right? Back in March, we saw this this number of fails, 6.4. I don't even know that GameStop is in IWM. Yeah, but so IWM doing wonky things. Right, then earlier, so right, this, now keep in mind, between the, what is this, the 14th here? The 14th and the 17th, 15th and the 17th? Yeah, 14th and the 16th. 14th and the 16th. So between the 14th and the 16th, so here, right? So VT also had a huge number of fails. So it almost looks like, right, they have this huge number of fails. They've got like a couple days to clear these, right? So they get a bunch of these on the 14th. Oh my gosh, what are we going to do? Where are we going to put all these fails? Where are we going to move them? Oh, move them over to IWM, right? Get them over here, right? Get them off the books. Then XRT, I think, also had a bunch of fails in here revealed. Though I think, were they later in the month? No, where were these? Let's see XRT fails. No, right on the 15th. All right, there you go. So there, you can see what they did. So we're over here on Richard's sheet, okay? First up, VT, they fail 1.3 million here over on VT, okay? Maybe even if they did this back a little bit more here. So 4.7, they've got a bunch on, I guess, ITOT. I didn't even know this was one. So they have some over here. But these ones are really interesting because they're so close, right? So 4.15, one of these must have had, 4.14, they must have had some, right? So XRT is it's 4.15. So they have a bunch of fails. First, do I have this right? I guess, yeah, 14 is here is VT. So VT, they fail 1.3 million units. Oh my gosh, what are we going to do? We got to clear these. What do? We go over to XRT. Fail 1.2 something million units of XRT. Oh my gosh, we got to clear it. It's on reg show. We can't do this. What do? Go over to IWM. Now fail 4.2 million units of IWM, right? So they just do this. They just bounce around these guys, right? So they fail. Then they recreate over on XRT to close these fails. Then they go, okay, now let's redeem over on IWM to close the XRT fails. All right, now how do we clear these fails? I guess they clear these, I don't know, somehow else. IWM, I imagine, is, I don't know, much bigger. They have huge fails over on here. Look at that, 6 million back in the middle of March. So they move these, right, they move these around to actually like make sure that, right, so when you're looking at this list, like if we're over on Chart Exchange, you can see now the Chart Exchange fails will go down, right? So immediately it's going to say, okay, XRT 1.2 million. Oh, but we clear them. I even had people telling me this. If I talk about FTDs, if I talk about CAT or whatever, they'll be like, oh, it doesn't matter. Like this ever mattered. Oh, but they cleared all the fails. It's like, yeah, man. I mean, did they clear them or did they clear the fails? You know, so like we have here over on Chart Exchange, right? It's going to show the fails are gone, but you know they still exactly right. Little hot potato, exactly. But I mean, these are still in disarray. Eventually. And this is what you know. Richard's been hinting at this. I think Jake2B was hinting at something like this in his other post. There comes a time when we get closer to if it's quarterly rebalancing or if it's reweighting, something like this. They can't keep these in disarray. And so as we get closer to these deadlines, there does actually have to be some buying, right? There has to be something going on in order to replenish these, in order to get the some number of actual shares back into these things for these rebalancing dates. Otherwise, I guess stuff gets forced through. Not sure exactly, but eventually these do come. Some of this comes to roost. Zero balance transfer fees. So keeping an eye on FTDs is big. Chart Exchange is really good for that. So this is where I get all my FTD data. I know Richard gets a lot of his as well from here. So you guys will hear me talk about I have a model, right, that I have in my head, and the model goes something like this when I'm trying to understand trading. So you'll hear me talk about you hear me use this term like externalities. So it's like I've also used this analogy of like a drain and a whirlpool before. So the way that I think about the price action structure, like how price action actually works, is you want to think about it as a formal complex system. It is, right? Like a market is a formal complex system. But insofar as it is a formal complex system, a true formal complex system, it is a number of different formal complex systems of varying degrees, varying orders of magnitude that are embedded within one another. Okay, so you have, let's say, you've got something basic, which is sort of, let's say, household. Let's say that's the kind of molecular level, very, very small. Now, effectively, that doesn't really matter because all that stuff gets kind of internalized and settled later. It's very small. It's not zero, and it's not that it doesn't ever matter entirely, but most of the household stuff that matters is getting routed through the options chain. So you can almost disregard. You can essentially disregard household putting in limit orders. They don't really matter that much. Not enough based on the flows that come in on a daily basis via things like hedging. So options hedging is really on a day-to-day basis what's going to move stuff around. So you have two different kinds of hedging that that come in. Okay, so you want to think about, you want to imagine the setup has a structure, right? It's got sort of static hedging points. And so the options market maker is going to hedge pre-existing options contracts. So this is why I'm always I'm looking, if we go over here, why I'm always trying to figure out what the structure is, why I'm looking at what our OI structure is, what our gamma hedging structure is. So if we bump over here, right, I'll be looking at our composite stuff here, okay? And I'll say, okay, so this is telling me more or less how different strikes are going to be polarized toward hedging throughout the day, right? Okay. So these you want to think of as kind of landmarks. These price points are something like landmarks, and they're not really going to be, they're already hedged to a certain degree, and there's going to be more or greater or fewer shares hedged. So the number of shares that are hedged with respect to these positions is going to fluctuate throughout the day as the price moves between these levels. Okay, so that is primarily what is moving our price. Is okay, but what actually moves the price, right? Because if you just let this system sit, it would reach an equilibrium and nothing would happen, right? It would reach an equilibrium. So what's happening to this system? Okay, so you have this structure in place. And flows, right? So options order flow comes in, and then it puts a dot, right? So every batch of options contracts modifies that structure. It modifies the valence of the different strikes, whether it's moved towards calls or puts, short calls or long calls, something like that. And so it's going to change the texture, let's say, or the character of these individual strikes. Now, on a day-to-day basis, on a single day basis, unless you have really, really huge, unusual options volume coming in, the structure is not going to change that much. Day-to-day basis, yes. I mean, even over the course of a week, it doesn't change that much typically. It does change, right? And there can be profound changes, especially when we have high volume opportunities or high volume activity. But it's not going to change that much. But day to day, right? I do it day to day because, I do have that refresher and it does make a difference. Okay. Now, so I'll look at this, but of course, this doesn't tell you the whole story because, all right, you have put GEX and you have call GEX. You can assume that all of the calls are long and all of the puts are long, which is, the majority of the time, most of the calls are long and most of the calls are short on the part of the trader. Or sorry, most of the calls are long, most of the puts are long on the part of traders, and most of the time they're short on the part of the dealers. Most of the time. But that's not always true. And part of how we can get a better idea, especially with GameStop, which is super heavily call skewed, very little in the way of puts is traded, right? It's usually like 90 to 10%. Calls to, nine puts or 9 calls are traded for every put on GameStop usually. So I look at the OI structure. So why do I look at the OI structure? And this is where unusual whales is actually really, really helpful. So if you have an unusual whale subscription, right, what you can do is you can go in here and you can take a look. So let's, like, for example, today, I was like, all right, let's see, where did we get change here? Where did we get change? All right, so this will tell you where we got change. And it'll say, okay, well, yesterday, between days, right, here's our change in OI. So you say, okay, well, these strikes had pretty decent, no one not so much. These had pretty decent changes in OI. Let me open this up. Let me see what I can see. Did this come in as like a bunch of mixed volume, or was there like a big block trade that came in? So block trades are helpful to spot because they can point out when the character of a particular strike is going to be a bit different than what we would anticipate as part of our sort of general assumptions about how call gamma exposure and put gamma exposure work. So this one, we did get a pretty big volume of calls at the ask here, but as we can see, like as the day goes on, gets a little tough to tease out, right? Which is which, it's pretty even. So we don't really know exactly, right? And you can see, right, the total volume here was like 20,000 and we only got 2,000 contracts increase. Little tough to tell. So that's the type of strike that we'd have to go, we're going to have to do a default assumption on that. Too difficult to actually figure out, which of these were actually open and which of these were not. I'm sure there's some, math whiz out there who could probably do a statistical regression or somehow figure out the probabilities on the distribution of these particular trades and whether the total OI at that strike is net long or net short. But, I only have a couple hours every day to figure this out. I'm like, all right, I see something like this. It's not going to be that, like if it's mixed like this, it's probably just a fine rule of thumb to go ahead and say, yeah, it probably mixed, probably ended up being net long, net trader long in terms of calls. But some stuff, like, let's see, what did I point out? This, right? Okay, for next week, 25, big contraction in the OI there. 4,000 calls, or 4,000 puts came off the board. So we open this up. What do we see? Oh, wow. Okay, so most of this volume, that was for today. Bid, huge single candle of 4,000 contracts at the bid, essentially, right in here. So that says, okay, well, we know 3 days ago, right? I pointed this out. We saw all of these come in at the ask, huge block at the ask. So this is one party opened, 4,000 or 5,000 of these at the ask. So they're long. Okay, so that's a long one. We know that strike's going to be long puts. So that put gamma is going to be trader long. And the dealers are going to hedge that position if it's approached in a specific kind of way, which means that if the dealer is short, they're going to have positive gamma and delta on their books, which means they're going to hedge that position by selling shares. So as that position is approached, its delta and gamma values are going to go up, and so they're going to short more shares of the underlying in order to hedge that position as that occurs. The gamma hedging is going to peak as that contract is going to go into the money, and delta is going to peak after that, but it'll peter out after that level. But we know, right, because, okay, roughly these same numbers here match up, and their orientations in terms of ask bid of the trade are right, they're inverse of each other. We know that, okay, and we see the shift in OI here. We know that it's pretty likely that this trader, whoever this was, just the next day went ahead and closed this. All right. So with that, like, and I just kind of go through in the morning too. I'll go through these strikes and I'll look across the different expiries and I'll just be like, all right, what can we figure out here? Is there anything weird? Is there anything standing out? Let's look at the biggest changes. And you'll see that in my articles, right? When I talk about that, I mostly talk about strikes where I see the biggest kind of shifts, anything unusual. Otherwise, I'm just assuming that, okay, this is, we can use default assumptions about the orientation, the holding orientation of these contracts when looking at the GEX. Okay, so then I use all of this information in order to basically build a mental model of how hedging is going to behave throughout the day. Okay, so where, and in particular, I'm going to be looking out for places of reversal. I'm going to be looking out for high likelihoods of a change in momentum. And so strikes like 30 here is pretty obvious in that regard, right? This has very resistant properties, so it's going to get hedged up, right? So as we approach it, it's going to be, so it's mostly trader long, dealer short. So the dealer is going to hedge that position by buying shares. So as it's approached, it's going to get hedged. But then as it is just about to go in the money, it's going to offer some resistant properties because it will be, its gamma hedging, its gamma value will max. Its delta value will not, but its gamma value will max. And so it'll stop having that same kind of upward pull right as we get there. So that is going to be a signal typically to traders to potentially take a trade to go in the opposite direction, to switch momentum, to change the positioning of their bets. Okay. So I use this in order to build this kind of model to anticipate, okay, what things are going to look like day to day, how different types of price action during the day are likely to move us around the trading landscape. And more or less, right, when we see that we're trading in this kind of tight pocket here, we have this kind of pocket, this is where we're going to trade, right? That will just tell us where we will be, because hedging flows, options flows, and hedging behavior is what is going to keep us essentially in that price range. Okay, so that I would talk about as kind of the first level, the first layer. And you can trade pretty well just doing that. Like, you don't necessarily need to, you can be kind of reactive to the other stuff. Let's say one more layer out. But that's kind of the first layer. So the options market, right? In an ideal world, that should basically be what drives things, right? There should be this system as it is, that should kind of be it. Well, obviously, ideally, you have kind of organic demand underneath that. And sometimes, you should have large orders that come in and then kind of stir this up, right? So this is, sometimes I'll say externality, right? So you have this system, it's all options, it's all hedging, it's moving around, right? And all of a sudden, let's say somebody will go, ideally, I'll buy 1 million shares of GameStop. Boom, that comes in. That's going to really make the whole system stir up, right? It's going to stir it up like a hornet's nest or something like that. Everything's going to reconfigure until it gets back to an equilibrium, and then options flows are going to move it around pretty substantially. Now, 1 million shares may not be enough to kind of disrupt a system like this. You usually have to look like, 3 to 5 maybe will disrupt the system. Something like that, but 1 million, not so much. But we don't even really see that, largely because any orders that are that big get routed to dark pools. So that doesn't even come onto the lit market. Now, the reason why, and this is sort of, I guess, the level I'm trying to get better at this point, and trying to understand better, is trying to read the data for what's going on with FTDs, what's going on with potentially these CAT errors too. Because from a trading perspective, okay, why do you care about that? Why does that matter? Well, that's going to represent, right? That's, if you can track those correctly, you can predict when you're going to get these injections of external liquidity into the market, when you're going to get these injections of buying or selling demand. So tracking shares to borrow helps me understand, okay, what is the risk that we might get a very large tactical deployment of short volume, right? For example, looking and saying like, okay, if we have a bunch of FTDs that are being settled right now, if we have a bunch of, if we have these CAT errors that need to be cleared, that lessens the risk that we're going to see that short liquidity, let's call it, that lending liquidity deployed tactically to adjust the price down in a very profound way. So something like we saw in January or in the second half of February, right? Stuff didn't need to be cleared then. Stuff was already cleared, kicked down the road. They could adjust the price down. They also needed to, because there's another layer to that, which is swaps. But if we don't, let's say, have something like a major set of swaps on the horizon, if we don't have a period where FTDs need to be cleared, or there's CAT errors, for example, if these deadlines aren't coming up, well, or let's say that there are CAT errors and there are FTDs, but there's no swaps coming up, that's a good chance that even if there is a fair bit of short liquidity, it's not going to be deployed to adjust the price down, because there's risk of getting trapped in that short position as FTDs and as CAT equity clearing and stuff like that kind of potentially blows you out of your position. Right, gets you stuck and underwater in that short position, which is not what you want, right? You want to be able to predict when that, if you're an institution that wants to adjust the price down, you want to essentially you want to be the only whale, let's say, that's messing around with the price. Okay, you don't want something else in the background also countering you, because that's really who has the power to screw you up. Okay, if you're a major institution that can play all these games with ETFs, who can go and borrow several million shares at a time from the lending pool, like, it's going to be another institution out there that's the one that can screw you up. So you don't really care what's going on with the options market. Now, the reason I care so much about that is that completely messes up what's going on with the options market. That completely destroys that framing. I think the analogy I've used before is like taking you have like a whirlpool, right? Like in your drain, like in your shower or in your bathtub or whatever. You got a whirlpool. Okay, the water's going down. It's looking cool. Okay, and then you just stick your finger in it. All right, what happens to the whirlpool? Goes nuts, right? This complex system is disrupted. It no longer continues to function in the way that it was prior. It loses its structure. A new structure in time develops around that. And actually, part of what technicals do is they help us kind of visualize that on the chart. So technicals can help us map what, I've referred to this technical paradigm, right? So we trade within certain technical paradigms. That helps us map more or less what's going on, maybe with some of these options flows, things like this. So we can combine these, and it's a pretty good visual. But it's FTD stuff that'll FTD clearing and sort of FTD settlement and CAT equity error clearing that disrupts the system going up, although it doesn't typically disrupt the system. When we move up because of that stuff, there's a lot of options activity that kind of walks us up and contains the price. We do see a lot of options activity keep kind of this bracket on the price, so that type of stuff stays within a pretty predictable range. They like to keep it that way. What's tricky about when we get adjusted down is it ignores the option structure. It breaks out of the option structure and completely disregards that. So those price transpositions down. So that stuff's always tricky. They do that a lot on GameStop. So we talked about this basically all throughout the winter. We were pointing this stuff out, talking about this a lot. Veterans of the streams here. So like everything here, most of the stuff I think that occurred back here was genuine selling. I don't think, like, for example, here, when we were cooling off from July, we were coming down off of that little July run. Talked a little bit about this earlier in the week. That was predictable from an options perspective, just like what I talked about yesterday. That dip, although it did likely use some lending liquidity. I'm not saying that there's none of it that was deployed, but it was predictable in that there was a sizable amount of new put OI that opened long beneath us, like imminently as we were approaching this stuff. It was very visible, just like what we saw yesterday, where I was just like, guys, look, puts. Like, that doesn't happen very often. When these big put trades for like short term, out of the money, big block put trades come in, it's like that doesn't happen on GameStop. That's rare. So when I see something like that happen, that makes me go, oh, okay, we're probably going to go down, because somebody knows, right? Where do those trades come from? Those trades likely come from a trader at an institution where that institution goes, all right, dude, like, I just picture Kramer just being like, all right, okay, we're going to move the price down tomorrow. It's going down pre-market. We're borrowing 1 million shares. We're moving it down. Open a bunch of puts today. Do it. Come on. Right. So like Kramer's hedge fund, like, he used to say that he would do this. Just whatever desk that's making the call, who's ever directing this stuff, is like, yeah, okay, us over here, we're going to short the shit out of this tomorrow. So today, go buy 20,000 puts and then take profits as soon as we bought them, which is what happened with the shorter term stuff. A bunch of those orders are actually still on. A lot of that OI is still out there. But okay, but this stuff, in terms of understanding what's going on at the FTD and sort of the settlement level or the liquidity level, that higher level up, is this, right? So this move here from the 29th of November to the 5th of December, this sort of move down here before this got blown out by whatever happened with Roaring Kitty's tweet there. This was an example of it. What we got here coming off of the January 14th, this was it, right? So this was predictable. This was bound within the option structure. Even this one was. This was not. This was not. Then we sort of flattened out, right? So this is a restoration of our trading bracket here. We cool off and then transposed. Then this was FTD settlement from here. So this was these FTDs that got kicked from around here, got settled here. We blew up to $31 in the pre-market, or no, after hours. And then this was transposed down again, right? So then this was doing this thing, but here, and then this was, I think, covering FTDs from here. And then this was covering FTDs from here. This now, right, is covering FTDs from here, right? So this is the CAT stuff from here, and FTDs from here. So understanding that, right, we can then try to come up with, I mean, it's not a really great model, but we can try to anticipate some of these turns, some of these bigger turns, when it's like, okay, when are we about to get this injection of liquidity that might transpose the price, right? When are we going to get these turning points, something like that, and how to, then if we think something like that is going to happen, we can think about preparing for that, trading wise or whatnot, right? So yeah, so quick here comment from Deswag, right? Previously described as putting their finger on the scale. Yeah, good news, because it's easier to see how lightly you're moving versus abruptly lifting could be impactful. Yeah, right. That's what they do, right? So it's like, okay, we're ready to come back up, and then they'll go, wait, no. They also do that, right? So that was what they did, not this past week, but the week before. That's a great point, Deswag. Here, right? This thing. This little pocket of move down here, right? So they knew that, I can only imagine, they knew that these FTDs need to be clear, or this CAT equity stuff was going to make GameStop's price run. So what did they do? Right, we kind of just flattened out. They went wait, and they can like hold the price in place with this stuff, so it doesn't take off. Set up long positions, right? Wait until they get everybody sorted. And why do they want it to take a longer time? So they can let IV come down, so they can get options cheaper. They can set up these positions less expensively. And then once they've got their position set up, then they go, okay, let's close the short position, and we come up, and then the FTDs come in, and then it's like whoop, and it goes up, and then IV goes up, and then their options are pretty profitable. So we saw that too. Here, they did this here. So this was, we were like kind of ready to go. Actually, they also kind of did this, I think, right before we moved on the 28th here. So, right, we had this gamma ramp kind of early, right? Somebody started to buy to take us up on that Friday. And whoever it was just like, no, not today. Right? Well, Monday, we move on Monday, right? Same thing with back here on the like 18th or 19th of September. So, well, we got this announcement on the 18th. 19th, it was like, oh man, we're ready to go, dude. Like, I remember talking about this. I might even still, I think that article back on the 19th of September is still on my X page, where I was like, man, if somebody even introduces like a little bit of something, like we're going to explode. And that was ready. Like, I saw that was in place on the 13th. And we started to get a little bit of volume. I noticed we started to get some bigger orders come in, and they got strategically routed to the dark pool. So we had some strategic order flow rerouting, and some shorting. Little bit of tactical shorting to keep us kind of stuck below 20, because as soon as we started to move over that 20 position, it was like we were going to go. And sure enough, Friday came in. They're like, no, we're going to wait. We got to wait until Friday, right? I was not aware of what was going on, let's say, at the time with that. Let's say the interest rate cuts would have an effect. But, whoever set this up figured out what was going on with interest rates, and then built this structure out themselves. One or more institutions built this out, and somebody made sure that it didn't go off prematurely. That's what I would say. Yeah, so they definitely do that. They definitely do the finger on the scale thing. Crime engine, crime syndicate. Yeah, these are things we can call them. Yeah. That's a good idea. It's a good question, I should say. Not sure. What's up, Jordan? Jordan's excited. I'm excited. I'm excited that you're here, and also that you're excited. Good idea. Okay, so if you buy a share of XRT, what are you getting with that? That's a good question. You are getting a tradable token that hypothetically maps to a bunch of underlying securities, including cash. However, in reality, right, a bunch of those securities can just be held as IOUs and cash. A value of a share, like, you're not really getting anything, man. You're buying a token that has some kind of a price assigned to it. It doesn't behave like it's made up, man. Like, that was the thing. Somebody asked me about that. Was like, oh wow, all this stuff is happening on XRT. Like, should we just go and buy like shares of XRT? It was like, no, no, that's not going to do anything. That's not going to do anything. It's like trading. I don't know. It's like trading meme coins or something. Like kind of, because it doesn't. It's supposed to map to a proportion of the funds. Like if you go out and buy a share, let's say, it's not like you're trading a finite number of unit. It's weird because it's traded that way. Because you personally, you the investor, can't create units of the fund. You are essentially buying this tokenized unit, this share of XRT, from an authorized participant that can create units. So, you're going to give them a certain amount of money, and then they're going to say, okay, this, after a certain number, they'll say, okay, we need to create this amount. Please bundle this together. And they're going to adjust the price based on what they estimate the cost of a single share would be for them to create, to go whenever they go and do this creation order. But we already know that they just they lie about that, right? Like they're not like, oh well, we have, right? So like, why would you need to redeem these so much is the question. The idea of creation and redemption, if you have the idea, if you're selling these shares, redemption is to remove them in a certain sense from existence. Because like somebody will come in, say, okay, I'd like a share. Okay, I'd like to cash out, right? Here's my share back. I would like my cash back. So what does the brokerage, the authorized participant, whoever got your money in the first place, what are they supposed to do? They put in a redemption order. They redeem the unit of XRT. The authorized participant goes, takes this from the fund, gives this to the brokerage, the institution, whoever did this, gives them the underlying securities so that the institution that you made that you sold the share back to can then sell those units, that the underlying, in order to get money to settle the cash in your account when you checked out of the fund. That's what's supposed to happen. That is not what happens, right? To see XRT's outstanding go from 9.7 million to 2.35 million to 8.2 million to 1.75, or I guess the 6.55 million to 1.75 million to all the way back to 8.2 million, and now we're back to 5-something million, implies that like all of the investors in XRT are just like, okay, give me a bunch of units of XRT. Oh, I don't want it anymore. Take it back. Oh, I want it back now. Give me more. Like just millions of people doing this. Hundreds of millions of dollars. Inflow, outflow, inflow, outflow. Apparently that's what's occurring. By how the mechanism is supposed to work, that's what that suggested. Of course, we know that's not at all what's happening. So really, you as a household investor, Patrick, you as a household investor, when you're buying a share of XRT, you're buying some tokenized, computerized nonsense that, it'll go in your account. You'll trade this token on your brokerage, whatever, and there you go. That's it. You trade a token. And then when you're done with your token, you sell your token. They're like, all right, token's done. Right? They make up the token for you to trade so that they can scalp difference off of the value of that at some point. But I guess it has to go through, I guess there are settlement procedures. Like I guess they have to settle trades that have to do with that. But does it have to, like, how does that line up with the outstanding? I don't know. Good question. Right. So we talk about these FTDs like they're exclusively having to do with GME. Right. We don't know that for certain in terms of like there's some piece of data that tells us that. But there is a high correspondence. Right? I mean, in having a lot of people observe this, there is a high correspondence of, let's say, FTD deadlines on ETFs and price runs in GME. Additionally, right, it doesn't matter, I guess. Like they may only have 1.63% GME holdings, but they can do this kind of create, redeem, millions of times, right? So millions of units, millions of shares, and sort of get GME shares out of doing that multiple times. And they can do that right then across multiple funds. So if you can do that, right, if you can, they're really, really doing it hard with XRT. They've been doing it really hard over the past 6 weeks, which I'm sure is difficult because that, as we've seen, that like XRT has been repeatedly incurring high numbers of fails. Like we've seen, a million fails here, a million fails out, but I think we had 2 instances of March of one was close to 1 million fails, one was over 1 million fails. We have now 2 instances in April of well over 1 million fails. That's not occurred recently. To have kind of an 8-week period, I guess, an 8-week period with 4 instances of XRT having over 1 million fails. That's new. That's new. But so, I mean, we can't kind of smoking gun it except to bet, right? Part of it is like, the test. You want to think about like trading is also kind of an experiment. If you bet that it's going to have an effect, if the logic of your bet is that must be true or something approximating that must be true, FTD settlement must be true in order for you to make money, and you are profitable on that type of bet, like what that essentially tells you, it's like running an experiment, right? It says when you run a scientific experiment, that's what it says. You don't know when running a scientific experiment if your theory is true in the sense of it is materially true, like your words map with a certain amount of statistical accuracy to the consensus objects or particles that you're referring to. But there is a form of truth in the sense of it gives you forward predictability on how events will transpire, right? Like, how do you figure out that all of the moon science stuff was true? Well, the whole Newtonian physics system and Eulerian Copernican cosmos thing, like, you wouldn't have been able to land somebody on the moon if that were false. So those principles were true enough. They approximated what is ultimately true enough to land people on the moon. Just like the Ptolemaic system previously was true enough for people to build calendars and calculate, measure time, and measure the seasons, predict the turn of the seasons, predict phases of the moon, predict eclipses, things like this, right? Navigate across the seas. So the Ptolemaic system, the geocentric cosmos, and its measurements were, true in the sense that it allowed people to do those things. So in a certain sense, right, if you then go ahead and do the same thing, right, you have this ETF model where you're saying, well, the hypothesis is that GME is the reason for all of these FTDs. So we can go to all these different ETFs and we can say, all right, bunch of fails here. We've got this kind of deadline approaching, 35 days out, we should get some recovery here. We're approaching that kind of quarterly rebalancing limit. So as we get close to this, we should start to see some price action that's correlated to that, bullish price action. And you take long options bets repeatedly and do that when you think that's going to happen, and you constantly hit, Materially, you don't necessarily know that that's true, right? But you've figured out something that is close enough, approximates the truth to a close enough degree that it gives you essentially the ability to predict the future. It makes you, as you might say, into a time traveling wizard. Yeah. So in a certain sense, right, that kind of experimentation, science makes human beings into time traveling wizards. So as long as you can accept, right, accept that, right, if you can accept effectual truth, when I do this series of things at a reasonably predictable probability, there is a result X that is favorable to me on the end of it, then my model is true enough. It's true enough to get that result. Right. And to be a successful trader, like you don't even need to have that successful of a model, right? It doesn't have to be that accurate. If you do have that accurate of a model, then you get to be Roaring Kitty. Congratulations. You get to be that guy. Because that guy probably does have an ultimate understanding of how the whole thing works. He does know how that works. That's how he's made $1 billion trading. Yeah. I think GameStop is how you capitalize on that. GameStop is how you capitalize on that. That's what I do, right? That's what I try to do. That's what I've had success for. Actually, hey, what do you know, guys? This week for me marks my 12th consecutive month, one full year, month over month, consistent profitability in trading. So how about that? Beginning this was the week. This was my turnaround, right? 3 years of mixed results, trying to figure this out, right? Having a couple months here good, and a couple months there not so good. May is it. I have not had an unprofitable trading month since May of last year. It's been one full year. One full year of doing this as my primary source of income. So yeah, GameStop is how you do it. GameStop's how you do it. Bodlondeb. Deb Bodlin, something like that. Indeed, XRT is cat shit wrapped in imaginary dog shit. Very good. You had 10. Hey, what's up? It's Jake Graff. What's up, man? Thank you for sponsoring. Yeah, 10 in a row, dude. 10 in a row. I mean, I think 10 in a row. Wait, somebody, maybe Kurt one time bought like 13 in a row or something. Kurt Lusko. Short Fridays. He bought a lot in a row one time. We just got somebody. So I think you were the second most all time with that in a row. But somebody today, I think it's he put a different name, but I think it's Chris Hoogstead. Just did 20 in a row today. So you have, I think, until next Wednesday. I think you have up the first 3 next week too. So it might, right? Jake's got the next 3 sponsored, right? Where it's where we've got cat errors. We've got cat error clearing expected. So it might, man. We might see that 30 test, man. Yeah. I remember those coupon books. Sold door to door by 10th graders saving up for a trip to DC. Yeah. Right. Buy a book of discounts. It's ridiculous. I remember those things. You could never use them all. And they expired after like 2 years or something, or like 1 year. Who was going to use all of those in a year? Oh, nice. A little GME tweet action there. How many they got? That's gonna be cool. Oh, this is for launch though, not for pre-order. When is launch anyway? Is it June 4th? There it is. June 4th launch event. Very cool. Options 101 book. I would watch some free stuff. I would watch free stuff that's put out by Spot Gamma. That's how I learned, I guess, the basics, and then just messing up. So you could just start with Spot. You could start with Spot Gamma and then just not, do the messing up part, because I did that. That's a good way to learn, but you'll lose some money if you do that. Yeah, I mean, if you have specific questions, I'm always happy to answer questions. If you want to leave a comment or send a message, DM me on X or something like that. Happy to help. I would recommend, if I would just say blanket, non-financial advice, but the easiest trade, right? The easiest to profit off of, that gives you an idea of actually how the game goes, is if you have a GameStop position, whatnot, right? Just start with cover call before you do anything else. Cover calls, because they're statistically, especially target out of the money cover calls. And what I also point out, what has been essentially what I say is the bread and butter. What every single month, this is what ensures profitability for me. I take some smaller risks with other types of trades that I'm improving on to extend that profitability. But call wall target covered call. So and this is what I do. This is why I talk about this all the time. Always try to point out what the call wall is. Always try to talk about what the option structure is. Find where the call wall is. The call wall not only is going to be the position, right? So it's the position of net largest call GEX, call gamma exposure. Usually, and recently, that's been at 30. 30 is also special for GameStop. I mean, it's a call wall in general, but it's special for GameStop. For some reason, the market makers really, really want $30 to be out of the money on a regular basis. So if you target the call wall, I mean, you can even go, if it's your first time, go $5 above it, because premiums are crazy right now, right? Go $5 above it and just practice selling cover call, just to feel it out, right? Literally engage your interest. Do that, right? So we call it interest in an economic sense, but it also actually gets you invested in terms of attention, and just watch how it behaves, right? Watch how that contract behaves. So much of options is there's only so much that a theoretical approach is going to teach you. I mean, it's helpful, but so much that I've learned about okay, what do I want to trade is stock specific, which contracts, which strikes, which expiries, that type of thing. How do these weeklies versus this monthly, versus when IV is at 75 versus when it's 100 versus when it's 150. A lot of that is just from watching the contracts change price over time. Just sitting there, being on your trading platform, not trying to click, not trying to enter, not trying to do this, but just being all right, I'm going to sell 10 cover calls for $35 for June, for example, and let me just watch how they behave. Let me just watch. How does the price change from day to day? What happens over the weekend? What days does it change more? At what points in time does price in the underlying matter more? And at what points in time does just the passage of time matter more? Or changes in IV, right? Get that IV indicator up. How does IV change? How does the change in IV actually affect this contract? How does it affect this contract? How does it affect this contract, right? And that type of stuff. And then you can do that. You can follow unusual whales and just look at other trades, look at other contracts that other major traders, especially big traders, are doing, because you can say, okay, if that were me, if I were in that trade, how would I anticipate that I was going to make money off of that? How could I do that if that were my trade? But start with covered call. Start with covered call. Target the call wall. If it's your first few, go above it, right? Notice, because like you can even do this, right? Even when I started making these trades, like with GameStop, well, last summer too, you could even sell like 50s, right in that. I was like, are we going back to 50? I don't know. You could sell weekly 50s and make like $1,000 a week selling like 50 of those. Like 50 50s was giving you like $1,000 a week in June of 2024. So like you can go way out of the money of those, right? I mean, that wasn't as out of the money at some points at that point then. But that's what I would recommend, right? That's not exactly a course or a book, but you can check out Spock Gamma stuff. That's where I kind of got an understanding of the relationship, say, of options pricing formulas and how hedging affects the market. So understanding that as well. But otherwise, I would say just go watch contracts. Go watch contracts change price. That's the best way. Yep. Yeah. Hey, I hope they're useful, right? I hope they're memorable. Analogies I find are really excellent. Anything that I've ever tried to teach anybody in a classroom or anything, analogies are great. Comparisons, metaphor is beautiful, wonderful thing. All language is fundamentally metaphor. So being able to have a good command of metaphor really gives you a command over the foundations of language, right? Just like understanding the fundamentals of a business. If you can properly understand how images work, if you can understand analogies, if you can understand metaphor and how that works, you understand the foundation of language. Nobody can ever pull the wool over your eyes when it comes to that. Same thing with business. If you can understand a balance sheet, nobody can pull the wool over your eyes when it comes to business. Same thing. Fundamentals are called fundamentals because everything about the pricing of a business is built off of that, right? So that's also part of what understanding GameStop's fundamentals last summer was part of what moved me to go 100% all I trade is GameStop. All I trade and all I'm invested in is GameStop. Understanding like what having all this cash meant in terms of the foundation, and also like putting a hard floor on the company was like, that's a whoa, that's really cool. And just have that laid out like that, right? Nobody can pull the wool over your eyes. Like you'll become such a confident trader if once you, it's so great having GameStop, but this just underneath you, there's just like hard, solid floor, and it's so amazing. Just standing with your 2 feet there, just being like, all right, here we are. We're at least here. All right, now let's pluck. Let's do. Okay, let's click. Okay. But without that floor, it doesn't feel that way. So you want to understand, if you want to have command over trading and understanding businesses, make sure you understand a balance sheet. You want to have command over language, understand metaphor. Cheers, dog. Thank you very much. That's a cool profile picture there. That was great. Thank you, man. Thank you. I've been enjoying the coffee. Very good. Hey-o. Yeah. Yeah, man. Yeah. Just start checking out contracts. Just start watching that. Oh, the Liber Usualis. So this is the this is the Liber Usualis. This is the missal that would have been used to follow along with the Tridentine Latin Mass. So this is the last edition of the Mass guidebook that was printed in, I think this is 1962. So this is back before the Second Vatican Council. The Liber Usualis was the guide to understanding what chance what readings, what hymns and stuff were to be sung at different parts of the year. So, for example, every Mass is in here from the year, and you can see, right, we've got Gregorian chant here on the right. We've got responses that have to do. So this is, how to sing this and whatnot. So you can, and I sang the Latin Mass in my hometown for many, many years before it was discontinued. It was suppressed by, the Latin Rite was suppressed by Pope Francis. Hopefully with Leo XIV, it can come back a bit more. But so I have a copy of this so that I can, just follow along. And sometimes I sing some of the propers to myself, and sometimes there's opportunity in Mass otherwise to sing some of them. So, so that's what that is. But you can get them. They reprint them. Online. So keep it right here next to my Latin copy of the Bible. Let's see if I can tilt this up a little bit. So this is the Vulgate. This is Latin Bible. This is the Septuagint. So this is the Alexandrian translation of the Greek the Old Testament, the Hebrew Old Testament into Greek, the Hebdomekanta. In Latin, it's known as the Septuaginta. This is the New Testament in Greek. Yeah, I have more Bibles at home, but that's my little. Back in the United States. That's what I mean. But that's my little collection here. Cheers, man. Oh yeah, dude. That's definitely OP. That's a hack. That's a crazy hack. Cheers, man. You're very welcome. Thank you. Thank you, my friend. Thank you. I really hope this is helpful to you guys. Yeah, they got good stuff there. Hey, listen, even if you just go check out, right, their glossary of terms, you can even just start here. They just got this whole glossary of terms. And it'll tell you the different, if you're, excuse me, it'll introduce you to beginner trading concepts, and they have articles on all these, right? Here, bid-ask spread. And they'll just tell you about this. So just go read this. Great place to start is their glossary. Even before you watch their videos, even before you read their newsletters, just go read the glossary. Great place to start. And they'll tell you about these terms. Investopedia is good. It'll give you a very broad sense of how some of this is used. SpotGamma is really good because it'll give you all of this, but with an eye toward options and options trading, because that's their principal audience, is people who trade options. So yeah, definitely check that out there. That would be wild. That would be wild. I don't know, maybe they do that. No, they don't do that with individual equities, though. They don't do that with equities. No. That's a good question. It's less than 1, Jordan. Yeah. Theta gang, yeah. Well, theta, yeah. Theta's great, right? Understanding that the reason why short options are so good is theta's on your side. Theta is always working in your favor. Usually. Without money options, especially. Ooh, this is a good one. It's not going to be June 6th. I know they put that up there. It's not going to be June 6th. It's going to be the week after. It's going to be the Tuesday after. It's going to be the second Tuesday of the month. That's what they do. I don't know why they can't get this right. I think they do this on purpose to screw people up. What they're doing is because last year, if you recall, they GameStop released earnings that Friday, June 7th, because of Roaring Kitty's live stream, right? So we traded way up way up before his live stream. That was, yep, the day before we closed at what? 46.55, and then in the pre-market we went up to $65. GameStop announced the at the market that day because we went so high right before his live stream. Yeah. So that's why they released earnings then. They were not planning on doing that. They were originally scheduled for the Tuesday after, so which was the 11th, because the shareholder meeting was the 13th. So they usually release earnings 2 days before the shareholder meeting. They do Tuesdays. It's the second Tuesday of the month, except for quarter four, which is the fourth Tuesday or Wednesday. Sometimes they do Wednesday. I think quarter four is fourth Wednesday. No, Tuesday, fourth Tuesday. So this is second Tuesday here. Last year should have been the 11th. Shareholder meeting was supposed to be the 13th, but then Computershare crashed, so they did it on Monday the 17th. Shareholder meeting this year is Thursday the 12th, so it's going to be on the 10th, June 10th. It's right here. So several days after. It's going to be the 10th. They haven't announced that yet, but shareholder meeting is the 12th. It's going to be on the 10th. But that's very misleading. They've done that. They did that in September too. They estimate the wrong days. Always do that. How is it that I know, but they don't know, right? How, like, really? I'm literally a dude sitting in an apartment with a laptop. Why is it that I know this? They can't figure this out. You can't tell me it's negligence. You can't tell me it's incompetence. It has to be on purpose. It has to be on purpose. They're not interested in properly keeping us informed. They're not interested. That is not what they do. That is not their job. They do not care about us. They do not. They do not. Hey, man, that's what you got to do. Nothing comes in life without sacrifice. To have one thing, you have to sacrifice something else. Thomas Sowell puts this very well, right? Which I think is quoting Milton Friedman. There are no solutions in life, only trade-offs. Yeah. From another sense, but non-economical, is also, I think, Frank Herbert quoting Carl Jung, or paraphrasing Carl Jung, which is the mystery of life. Actually, right, Herbert says the mystery of life is not a problem to solve. I think he says, but a reality to experience. Jung says the problems of life are never solved, only outgrown. That's Jung's orientation there. So the idea there is there are no solvable problems. A solvable problem is where the sacrifice is, how would you say, unspoken, obvious, an obvious preference, something like that. There's an implicit value judgment. There you go. That's how you'd say. There's an implicit value judgment. There's an implicit value judgment. A problem with a solution is a dilemma with a trade-off where the values are embedded implicitly. There you go. There you go, me. So now you got Jung, you've got Herbert, you've got Sowell / Milton Friedman, and now you've got me. There you go. Quote me on that. Somebody make a clip. We'll put it on the YouTube channel. Put the short up there. Yeah. Are we realistically waiting for the next console cycle for the next leg up? I mean, we're in it, right? I mean, yeah. Yeah. Switch is probably going to make us yoink, dude. Switch probably will, and then we've got more consoles coming out over the next couple of years. So we're going into one, and I think the phases of GameStop up movement, right? have to do with the console cycle stuff. That GameStop was in a console cycle back in 2020. Yeah. Quarter four earnings was great. Unexpectedly good. Right, okay, company wasn't profitable at that point, but it was not dying at the rate that the shorts at the time basically said it was. It wasn't. No. So now, right, think about this. Think about this. Last year, GameStop turned a profit. Guys, GameStop turned a profit last year, and it wasn't a console year. Oh. So what's going to happen now? What's going to happen now with all this cash and the console cycle, where they're going to show revenue growth next 3 years, this year, next year, year after, and what they're doing with the collectible stuff. I mean, game over, dude. Game over, man. Bill Paxton. Game over, man. But you know now, right? That's the thing. Life is only understood in reverse, but must be lived forward, right? Kierkegaard. You have to understand it by playing it backwards, but unfortunately, you have to live it forward. So, necessarily, in order to understand it, you have to go backwards, but you live forwards. That's it. Embrace the thrownness. We'll use some Heidegger, right? Die Geworfenheit. Ich würfe, ich werfe. From the werfe, I think. Geworfenheit. Thrownness. Yeah. Right. Here you are. This is a situation you're in now. That's what it says. This is a situation you're in now, so live it forward. Was I at Yale the same time as Michael Knowles? I didn't know he went to Yale. I was at Yale as like at the same time as a bunch of people were, but like didn't know him. I'm pretty sure I was there when JD Vance was there, but I mean he was at the law school. I did have one class. I did a class on medieval law. If you want to know what my education was all about, I did a class on medieval law. So the whole class was done with the law librarian and got to check over like old medieval law books, canon law, civil law, Gratian's Decretum, stuff like that, which is really cool. But don't think JD Vance and Michael Knoll were in the medieval law, doing the medieval law library stuff. Let me find out. Michael Knowles. I think he's a little older than me. Not that much. He's only a few years older than me. Oh, BA. Okay. So he was undergrad. So no, he would have graduated. He was an undergrad before I was an undergrad. So he graduated decently before I did. Before I was doing my grad work there. So he would have graduated like 2012, I think. So I was down in Baltimore. I was at Johns Hopkins when he was graduating Yale. So. But I am from New Haven also, so I was in high school like when he was, for most of the time that he was there. The ora pro nobis. Ora pro nobis Deum. Alleluia. Yeah. Or it could be the litany of the saints. Sancte Michael, ora pro nobis. Sancta Maria, ora pro nobis. Sancta felicitas et perpetua, orate pro nobis. Yep, litany of the saints. Litania Sanctorum. Law, yes. What earnings report would the Switch launch be in? Good question. Q2. September. Yeah, we'll have some fun. We'll have some fun in September. Yeah. Indeed. Cheers, my friend. Thank you, and thank you, Not Medical Advice, for for your monthly support. I really appreciate that, man. It's the data expenses are not cheap, but I really appreciate that. I really appreciate that. Hey, Gamma Chad's here. Checking in from the road, picking up my son from college, paid with the covered GME calls this year. All right, that's what I'm talking about. Way to go, man. Cheers. Cheers to your son, too. Yeah. Let's go forwards, you must go backwards. Yeah, George R. R. Martin. George R. R. Martin, A Song of Ice and Fire. Yeah. All right, folks. This is a great time. This was great. I had a lot of fun today. It's always love going through this. Obviously, talking about the stonk is great, and going over this week stuff and going over some of these mechanics. Sure, but then this is great. Great questions, right? Talking about what's going down with how I use these different metrics, how I use these different data services in order to basically put out this analysis, how I understand this as a trading model. Great questions in terms of like where to start. Yeah, definitely start with covered calls there. Got a little bit of got some fun there. Got to quote some philosophy quotes and stuff like that. So really great. As always, guys, I really appreciate all your questions. Appreciate all your support. Whether it's in the form of little donation, or it's if it's a coffee, it's helping offset data expenses. But leaving questions, right? Questions on a regular basis are so awesome, because that you never know when something is just gonna lead me down some little rabbit hole, and then I find something that kind of unlocks the week. You never know. So that's a great way. Like, always appreciate that. Comments, even just a little thanks always peps me up. So I really appreciate you guys. Thank you so much. As always, great to be a part of this with you guys. And look forward to have a great weekend. Look forward to seeing you guys next week. Look forward to seeing what goes down with these 7 billion CAT errors next week. So we'll see. So really, thank you so much. Enjoy the week. Enjoy the weekend. And we'll see you on Monday, guys. Take care, everybody.